Well, that's a technical default because these contracts are T+1, which means delivery should be done the next day, and now it's T+60 or 90.
Yeah.
So that's a technical default, and I don't think that situation will go away. So in the next few weeks or next few quarters, next few months, we'll learn what the repercussions will be. But I think the rise and the rally for gold will have legs. It won't stop here. If you look at average gold rallies in the last 50 years, you can expect $5,000 gold within 18 months, just based on the average rallies we've seen in the past.
Yeah.
A technical default occurred due to contract settlements, which should have been completed the next day, T+1, but are now delayed by 60 to 90 days. This issue is unlikely to be resolved soon, and its full repercussions will become more apparent in the coming weeks or months. Meanwhile, the rally in gold is expected to continue, with historical trends suggesting that gold prices could reach $5,000 within 18 months based on past average rallies over the last 50 years. The speaker, Willem Middelkoop, a Dutch investor, explains that, while tariffs are the public focus, a more significant, less understood issue is driving the massive movement of physical gold from London to the US. Experts remain uncertain about the exact reason. Still, there has been a growing call for transparency regarding Fort Knox, which hasn't been audited in over 50 years. Meanwhile, central banks in over 25 countries have been aggressively accumulating gold, with record demand for 3 consecutive years. Investor Eric Sprott suggested that if Fort Knox were opened for inspection, it could reveal significant developments, hinting at major news. Middelkoop elucidates that the current financial situation is the most serious in 50 years and could lead to a significant crisis. In response, the U.S. is exploring unconventional strategies, including monetizing assets and building a Bitcoin reserve, recognizing that the current path is unsustainable. One potential move is revaluing gold, but the approach matters. Adjusting it to current spot prices could benefit the U.S. without aiding rivals like China and Russia. In contrast, a drastic increase to $10,000 per ounce would help competing nations. Meanwhile, history suggests that every 80 years brings significant societal and leadership shifts, and with 2025 marking 80 years since the end of World War II, global instability and potential conflict are rising concerns. The U.S.'s actions, rather than stabilizing the situation, may be contributing to further global uncertainty. We're about to explore the video, but first subscribe and hit the bell icon to keep up with our newest uploads. Your feedback in the comments is always appreciated.
It has been spinned. This is all about tariffs, but I think that's only the spin. I think there's something much larger at stake.
Okay.
Nobody knows. We've been researching this. We've been talking to a lot of experts. Nobody knows exactly why there's this huge move from physical gold from London to the US. We know there's this call to open up Fort Knox and have some transparency there. I've been writing about that for 20 years. An audit is long overdue. The last audit was over 50 years ago.
Yeah.
It could be connected to that one, but what we do know is that central banks in over 25 countries are fleeing towards physical gold. We've seen record demand by central banks for 3 years in a row. I think let's concentrate on what we know, let's concentrate on the larger trends, and then see where we go from there. But if I was at Eric Sprott's keynote this morning, Eric Sprott said if they'll open up Fort Knox, some eyes will really go wide open. So he's expecting some news coming from that front. The most serious it has been in 50 years.
Yeah.
And this could be the big one. This could lead to the big one. And now the US is getting creative to, let's say, refinance their balance sheet. They want to monetize their assets. They want to start building a Bitcoin reserve. It shows you this administration is willing to think outside the box. They feel the need to do something creative because the road we were walking on and we were kicking the can down the road for so long, it's a dead-end street, and they do understand that.
What happens if gold's revalued?
There are 2 scenarios. You could revalue it at current prices. This will benefit the US because the US is the only country which still has the gold on its balance sheet for the $42 per ounce. So this will help the US and not their enemies. You could revalue gold much higher, let's say to $10,000, but then it's also very beneficial to China and Russia. So I think that's not of the interest. That's not the road the US wants to go.
Yeah.
You see, like big changes coming to to society, and actually now this year 2025 is 80 years past 1945, the end of the Second World War. So we are in this period of change, and change, it might bring chaos and crisis. If we're unlucky, it might bring a large war. I hope we don't end up there. But this list is showing there's so much chaos in the world. Yeah. There's so many risks, and now you have the US really destabilizing the world a bit more, right. Destabilizing it a bit more.
Willem Middelkoop points out that the world is shifting from a unipolar to a multipolar system, with the dollar losing dominance as the sole reserve currency. While the West will likely continue trading in dollars, the BRICS alliance is strengthening and developing a separate system, with much of China's trade already conducted in its currency. This shift threatens U.S. influence, prompting Trump to push 100% tariffs on BRICS nations. While this pressure has led BRICS to reconsider some moves, it also reinforces global efforts to reduce reliance on the dollar, as aggressive tactics can be seen as a sign of weakness rather than strength. Trump and his administration have been clear about preferring a weaker dollar, which has declined since he took office. This trend supports gold's rally and may continue. The broader strategy involves creative financial moves, including incorporating a Bitcoin reserve. Key figures like Wall Street veteran Scott Bessent, who trained under George Soros, are likely shaping this plan. Additionally, efforts may be made to prevent Elon Musk from accessing Fort Knox, as such a move could create instability. Moreover, the junior miners remain undervalued despite rising gold prices, with some companies priced as if nothing is happening. Many gold discovery firms are valued at just $5 to $10 per ounce in the ground, suggesting significant upside potential. A major rally in the junior mining sector could be on the horizon. Now, let's get back to the interview.
It's no surprise that we're moving away from this unipolar to a multipolar world. The dollar will survive. Like the British pound is still there. We don't have the British Empire anymore. British pound is still there. So I think we'll end up in the same situation. The Western world will still trade around the dollar, while the Eastern world, let's say the BRICS alliance, and the BRICS alliance is getting stronger by the day, they will work on a separate system and don't trade that much in the dollar. Actually, if you study the bilateral trade of China, most of that trade isn't done in dollars anymore. It's done in their own currency. So China, of course, has a large reason to work on a parallel system, and they are the leaders of this BRICS alliance. And that also explains why Trump is threatening the BRICS alliance with 100% tariffs. And that shows that the US is afraid of the BRICS alliance.
But it seems like it's worked. It seems like BRICS has said, okay, we're going to rethink this a little bit.
But an unintended consequence will be that more and more countries, they understand the bully politics of Trump, and they will move away from the dollar. If you start to threaten other countries, it shows weakness. That doesn't show strength. Yeah. Well, I think the Trump administration and Trump himself have been quite open that they want a lower dollar, not a higher dollar. And since Trump started, since he arrived in the White House, what was it, January 20th? Yeah. The dollar has been trending lower, and we think the dollar topped out. It's trending lower now, might continue to go lower. Of course, that supports gold, the gold rally as well. So
what's the game plan, though? Get back to QT? Is it get QE? We're going to just take the money on the market over the next 6 months?
The game plan is that they will work on something very creative where the crypto, the Bitcoin reserve, is part of it. I think he has quite a strong financial team, Scott Bessent, who's a Wall Street veteran. Yeah. He understands this very well. He used to have his training with the Soros guys. He worked for Soros. He's no dummy. He knows what he's doing. And I think he will try to keep Elon Musk out of Fort Knox, because that might destabilize it. So I think there will be some nice surprises if we look at at their profits. And the junior miners are still valued like nothing is happening. We invest in companies who are discovering gold, and they're valued at $7 or $10 an ounce gold in the ground. And I think we're in for a very big re-rate in the junior space.
The global financial landscape is undergoing dramatic shifts, with mounting debt, currency realignments, and increasing gold demand signaling potential instability. The long-term consequences remain uncertain as the U.S. explores unconventional strategies to navigate these challenges. Whether through gold revaluation, Bitcoin reserves, or geopolitical maneuvers, the coming years will be crucial in determining the future of global markets. How might a shift away from the US dollar as the world's reserve currency impact global financial stability? Could a significant gold revaluation trigger unintended economic consequences for the US and its rivals? Feel free to share your feedback in the comments below. If you found this helpful video, hit the thumbs up and subscribe to keep up with our latest updates. We appreciate you being a part of this journey.